Well, guys, as we expected, the markets have continued to drive higher into the main trend line, but we also knew that tariffs and potentially earnings season could knock it off its perch. So what are the biggest traders and investors in the world doing right now? It looks like they're starting to move potentially a little bit defensive, and this is the first time we've seen it in weeks and even months. So in today's video, we take a look at where Wall Street is really starting to put its money. Could it be that crypto is the place to be? And what's going on with Tesla? The American party? Could this be the kryptonite for the stock? Guys, we've got a lot to get into, including some of the biggest options levels for stocks, commodities, and cryptos. Let's have a look right now together, see what we can find. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we'll be covering the latest macro data and of course, key levels. If it's your first time here, then remember to subscribe and smash that bell icon if you love markets like we do, as we cover them every day with a lot of detail. Let's kick things off with the macro side, and we'll start here with the tariffs because of course, this is now the big news story of the last 24 hours. And who couldn't have seen it coming? Yes, of course, the markets have sold off a little bit on this, but the main thing is, will it stick, or are we going to see everything just keep getting extended? So we obviously know that these are the new deadlines for August, and it looks like here, according to the July 7 letter, we're moving ahead with slight changes to countries like Japan, and of course, some even lower changes here when you're looking at others. These are the main countries, though, that seem to be picked out, I guess, by that July 7th letter. And if it does stick, remember, it will put friction, especially if we see retaliation on the markets. So it brings us to where are we actually with this market rally? You guys know that we've been following technology and semiconductors. Really, that's all that matters. In the US market, innovation is key. And as you guys know, 83% of the time, innovation businesses will outperform others. And that's exactly how this rally has been so far. And this great chart here from Duality Research kind of shows you how everything's been performing as we've been moving up. Semiconductors have been the best, technology's been kind of the second best, and actually metals has been the third best. So we've kind of really had that pick of three main sectors. What hasn't done well though is healthcare, staples, and utilities. And as most of you know, these are the defensive sectors of the market. And if we start to see them moving forward, especially at all-time highs, then that could mean that the market's getting ready for a bit of a sell. And yes, you may have guessed it, the last 24 hours was the first defensive day we've seen in weeks, maybe even months. So certainly something we'll be paying attention to. It also looks like if it's in the press, it's in the price, has started to dissipate in terms of people being fearful of America. The Sell America story count dropped all the way to almost no news stories, according here to the latest research. And that's a huge contrast, of course, to some of the big spikes that we've had. If you've ever been following markets, you'll know that when generally the markets are roaring with some kind of concept, that is, let's say it's Sell America in this case, then generally you want to be considering the opposite side, especially if the technicals and the flows are showing that way. And this is where we get to the next list. Yes, we've gone to an all-time high, but we haven't done it in the equal market, which basically means that in equal weighted, we're not going up with all of the country's kind of stocks. We're really just going up with innovation. And while there's no real problem with that, at least initially, eventually you do need a full breadth kind of pickup to really sustain these all-time highs and to continue moving on. So over the last 24 hours, what did we get, guys? Well, we did get the first day of defensives. Gold, utilities, staples, healthcare. These were all the sectors that were doing the best. And you may notice that semiconductors was actually one of the worst performers. Now, this could show us rotation, and if we see this over the next 3 days generally, then that will tell us that maybe the market's gone defensive. What we'll be spotting for, and we'll be looking very closely, so make sure to subscribe for this, is big, large, dark pool transactions, particularly in sectors such as semiconductors and tech. If we get those and we get a defensive rotation, then it will make sense to this chart as well, and that is that the seasonal strength of Christmas in July might be starting to weaken off. And you guys know that this is what we generally expect, which is strength from the back of June into the start of July. Obviously, at the time of this recording, we're the 8th of July. And then somewhere right around the middle, we seem to have problems. Now, if you've looked at your earnings season calendar, you may notice that the 15th is also JP Morgan's earnings report and I believe a CPI data report. So we've got a lot kind of hinging on the middle of the month. And of course, earnings season is about to kick off. And why does this matter? Well, it comes back to valuations. Now, according to this particular metric, you can see here, yeah, we're overvalued again. And Gainify has a cool chart here. And I always like to look at this because, yeah, it's a good way of kind of, consistently saying, is the market cheap, such as down here, or is the market expensive? Well, right now, you may have guessed it, there's a little bit of FOMO in the air. Probably a lot of your family, friends, and maybe even yourself are feeling, the pain of maybe not being in some of those biggest growth stocks, or maybe you're just riding high and thinking everything's so fantastic. Whenever you feel those emotions, usually you're getting close to the tippity top for that particular period. And it does make sense to be there right now. But coming into earnings, this is where we're going to find out whether tariffs are starting to take their effect. Remember, the tariff lag tends to be around 4 months since implementation. Now, we implemented tariffs, or we at least started to find out about them during Liberation Day. And obviously that was getting on 3 to 4 months ago now. So we're starting to get to that point where earnings may show the problems. In terms of where the strength has to be, it's the mega caps: NVIDIA, TSM, Google, Meta, Microsoft. These types of stocks have to show strength. Otherwise, the market will not be able to hold higher. And it really comes back to that thought process of year 3. Whenever we have 2 exceptionally good years, over 20%, such as we did in 23, 24, absolute ticks, we knew back in 2024 at the end that this year was going to be choppy. Now what we've done is we've managed to get the all-time high. And of course, usually we go back into what we call a kangaroo market, a market that goes up and down and all around. It's very normal for a year 3 market to do this if we follow the similar trend. So don't be, unaware that this is kind of what generally does happen. And even here, when we look at overall post-election year cycles, we generally see strength into choppiness, into more choppiness in the midterms or the mid-year, and then of course strength into the back end. So will we focus on this? Absolutely. This is kind of one of the big key reads that you're going to be looking at markets, and it makes sense when you're looking at everything across the board. So the good news for now is that advanced decline line has made an all-time high. We are seeing stocks starting to pick up. And we're also been seeing a little bit of US dollar weakness. But this is where I think Wall Street might be starting to move into. We have a negative 32 when it comes to US dollar overall positioning. Basically, nobody believes in the dollar anymore. And while we've been incredibly bearish on the dollar during 2025, as you guys know, well done to you, by the way, we did hit that magical 96, 95, 50 level only a few weeks ago, or maybe even only a week ago. And this is where things could change for the dollar. The narrative is horrible. It's really bad. It's the worst we've seen in years and years and years. But could we be looking for a trend change? Well, as we always say, we follow the flows, and we do so by following the technical analysis. So stick around, as we do have the dollar chart coming up to have a look at soon. In terms of where the market may go, if we do end up seeing a sell, a lot of the time the markets will go to very weak businesses. Those are the ones that have been consolidating for a while. Things like Pepsi and others, we have seen consolidation in them. Actually, one of our members in the private trading community, links in the description and pinned comment down below if you want to join us there. He actually found Pepsi only about a week ago, and it was a pretty good trade. And again, it just shows you there's so much abundance in this mindset. So many different opportunities. You miss out on tech, there are other old legacy businesses that can do well. And of course, there's always something else out there. Guys, always remember this. Never feel FOMO, never feel fear. How many times have you seen great ops and then missed them and then seen a new one next week? Keep the powder dry whenever you feel those emotions. Now, when it comes to treasuries, a lot of people are trading it. On this channel, we always talk about the idea that treasuries is more of an investment or positioning process. Do not trade treasuries. Why? Because they're not really a great trading tool. Some of you will disagree with me. But as we've seen recently, we've had a lot of ups and downs. We did get a massive dark pool just the other day up here at around 88, 89. And since then, we've seen, of course, treasuries kind of flounder back down. I believe there's going to be a massive trade on treasuries, especially when the Federal Reserve eventually does instigate QE again. But for now, it's kind of like a sleeping giant. Nothing really going on. Another one that's interesting is that people have started to transact on some of these hypergrowth stocks. The storylines are awesome for Hood, but we also saw the largest transaction of all time on this 2 times long ETF. And that probably is a take profit at the peak. So this could mean down to sideways action for Hood for now. But certainly the tokenization and everything going on in the crypto world has everyone talking. And rightfully so. It looks like crypto, at least Bitcoin and some of the other big ones, could be in for a bit of a boom here thanks to the US government. Weekly crypto asset flow continues to be pretty strong. And we've had some excellent months of kind of consolidation here in the charts. And one of the things that I think is really, really, really big, and we spoke about it in our Monday live show, was that crypto is now seeing more MSTR clones. So I think there's somewhere between 100 and 130 MSTR clones out there. Obviously not as big as MSTR, but they're all borrowing the concept of, we don't really make any money as a business. I know what we'll do. We'll become a Bitcoin business. And they're buying Bitcoin, allowing people that, of course, cannot access Bitcoin in terms of risk to buy it as a stock. And this is leading to a whole new, I guess you would say, type of kind of system out there. At the moment, most of these are trading at 2 times the value of Bitcoin, but obviously that's going to compress over time. And what we're getting at here is that these guys own around 3% of the overall Bitcoin market. So if we consider that probably 80% of the Bitcoins are not traded, some are lost, some are just hodled, etc., then we're probably only moving to around 17% float at this point. Of course, approximate numbers. So what's happening? We're getting a drain on the liquidity available here, which can lead into some massive squeezes on the horizon. Remember, the Bitcoin contract is now, I think, the second largest options contract out there in the world in terms of how we're seeing this traded. So just a couple of things here. Stable coins are going mainstream. We all know this. Tokenization of everything is going through. Volume's starting to dry up a little bit. And of course, the US dollar is starting to sit around the same level. So we are pretty much at a textbook basing period as of the peak here for Bitcoin. Will we need another wipeout though before it goes higher? That's